I'm curious, what are some of the criteria that you use when you're evaluating companies, especially for those startups that are in the network that are thinking about what their exit is or when they start to work with private equity down the line, what you as a private equity investor are really looking for?
So, a lot of the venture community is looking for.
On this episode of the Liberty Ventures podcast, I talk with Travis Monteleone with LP First Capital, a private equity firm that has a different approach where it actually makes investments on a deal-by-deal basis working with its LP network. We dive into the challenges and the benefits of doing this in private equity, the ways that they diligence companies, really wanting to understand the passion of the CEO, typically a founder, for building the business up, but having the right cultural fit and integrity in order to do so effectively. And actually a conversation then about the power of capitalism to reveal information in a way that other systems don't, and that being the nature of the investment process, gathering as much information as possible to figure out which opportunities deserve greater investment and have the potential to scale versus those that don't, and the challenges that each are going to face. It's an amazing conversation with great insights from both investors and founders in how to scale businesses and investments. Check it out now. All right, Travis, thank you so much for joining the Liberty Ventures podcast today. In preparing for this, I just loved our conversation about the work that you've been doing with LP First Capital and your background and your approach to investing. We've got some great insights to dig into, but want to give you a chance to just share your background and your story, really, that's led to you entering private equity and the approach that you're taking right now to investing as context for everyone else in the Liberty Ventures community before we start diving into everything else.
Yeah, absolutely. Well, Alexander, thanks for having me on. Super excited about this. As far as background goes, I grew up in Texas and have spent the vast majority of my life here. I went to school at UT Austin. And so like a lot of Texans, I started out in the energy industry, first in energy investment banking and then energy private equity after that. So really a pretty finance heavy background. I've really always liked the energy industry. I think that the macro pieces especially are super interesting. It's very cool that, whatever Iran or Putin, does on a day-to-day basis, that's affecting your job. I think that's really exciting. But for me, eventually I kind of wanted to explore something a little bit more entrepreneurial and smaller scale. My background has mainly been with larger firms. And so I started looking for more generalist and entrepreneurial type firms, really in the lower middle market PE space, which to me just felt like it had a lot of really interesting tailwinds and opportunity that I could go explore. So I started looking around for various firms and ended up getting introduced to LP First Capital, like you said. And they're a lower middle market private equity firm. It's been around for about 5 years now. They've made about 55 acquisitions. We've deployed about $350 million of equity, and it's been a really great journey so far. I've totally loved it. It's an entirely new world, very, very different from what I was used to. Still finance, still investing, but the types of companies that we're going after is just radically different. And so I've really enjoyed just wearing a lot of different hats in much smaller scale type businesses, and I think it's been a great learning opportunity as well. So since I've joined, I've really been helping out with about four or five different platforms that we've invested in. I'd say I spend most of my time on the board and co-leading an investment that we made in December of last year. It's a property management company called North Point. So I'd say I spend most of my time there. I also spend a pretty good amount of time kind of doing investor relations type fundraising work. LP First Capital is structured as an independent sponsor, which we can get into this later, but that basically just means that we don't have committed capital. We're raising capital on a deal by deal basis. And so fundraising is very important for us. And so I spend a lot of time, going to investor conferences, talking to individual investors, and, that takes up a good amount of my time as well. So overall, that's kind of how my experience at LP First Capital has been over the last year. And that's basically me in a nutshell.
You clearly bring a lot of experience to the table in the investing world. And actually, the way that you go about investing now on a deal-by-deal basis is very similar, although at a much bigger level than what Liberty Ventures does with our angel syndicate. And that is it is a it's a tiresome process to take it on a deal by deal basis instead of having your own fund in order to deploy capital as you see fit. What's that experience been like for you? What have you learned about raising money on a deal by deal basis for anyone else who's a part of this, and insights for other people to take away from that?
Yeah, I mean, it's a very interesting model. It's a lot newer than the traditional private equity model. Traditional private equity at this point has been around for decades, and so most institutional investors are very familiar with the model. The independent sponsor model, on the other hand, is not the same way. And so a lot of the fundraising involves a certain level of education about, how it is that we're structured, how we're incentivized, why it is that we're raising on a deal by deal basis. And so that education piece ends up being a pretty big part of it. It's gotten a lot more developed. I'd say there's been a lot more interest in independent sponsors over the last even 5 years, 10 years, certainly. And a lot of that is driven by just increased interest in the lower middle market space in general, as the traditional middle market has grown, increasingly competitive, and there's dwindling returns in that space. And at the same time, you've got more and more dry powder looking for private equity type returns. The tendency has been to look lower middle market with smaller companies, and so the interest in that space, I think, has spurred on a lot of the growth in independent sponsors, just because they tend to be more on the ground and better able to find, real small, interesting opportunities. So that's kind of our specialty. And the benefit, of the independent sponsor model, in my mind, is the flexibility that it affords is the big one. So whereas a traditional, private equity fund is kind of constrained by, one, their investor base, but also just time horizons, right? They've got to be in and out of most of their investments within a 10-year period. As an independent sponsor, you're really able to go after capital for different strategies from different types of investors, so very different risk profiles, as well as time constraints or lack thereof. So there's a lot of flexibility to pursue whatever interesting opportunities we come across, and so we really love that flexibility, and think it's something that sets the independent sponsor model apart.
It really does. And to be successful with that, you need to be able to pick companies incredibly well and be able to convey why this is a good investment to your investors, because it's not just the thesis of what you're doing broadly or your track record, it's the individual deal. And I know that you spend a lot of time thinking about how to find the best companies and what makes for the perfect company. I'm curious, what are some of the criteria that you use when you're evaluating companies, especially for those startups that are in the network that are thinking about what their exit is, or when they start to work with private equity down the line? What you as a private equity investor are really looking for?
So, a lot of the venture community is looking for either pre-revenue companies or pre-profitability companies, right? So there's some, earlier stage of development. By the time you're looking at private equity type dollars coming in, the business is usually cash flow positive and has been for some amount of time. And so that's typically what we're looking at, is a steady cash flowing business. Our bread and butter as a firm is a buy and build strategy. We really love starting with a large platform investment company, typically in kind of the $4 to $10 million of EBITDA range, and then growing through a mix of organic and M&A growth after that. So that's really the strategy that we've honed over the last 5 years, and one that we felt we've been pretty successful with. And so when we're thinking about the right companies that fit our buy box, it's usually companies that, like I said, have strong cash flow and are profitable, have good margins. They exist within an industry that's pretty fragmented and has not seen a ton of private equity activity already. And that is kind of ripe for consolidation, right? That there's a lot of inefficiencies out there, whether it's through buying power or power over suppliers or shared marketing services, right? All these benefits that typically come with scale that for one reason or another have not come to this specific industry yet. Those are the types of industries that we get really excited about. So, and then on top of that, I mean, a lot of that is pretty basic, private equity 101, strong cash flows and all that good stuff. On top of that, what we're really looking for is good, high quality management teams. And so these are managers who typically founded the business on their own. So they are entrepreneurs and operators in their own right, and are more passionate about it than anyone in the world. And so that type of founder entrepreneur is someone that we really love to partner with and enable their growth. Basically, we view ourselves as providing capital to fund further growth. We will share, our expertise and learnings, our combined kind of investing experience to these founders. But at the end of the day, we're not looking to come in and wipe out the management team and put ourselves in instead. We really like to turbocharge the growth of the existing management and specifically, ideally, a founder owner, right? Someone who this is their baby and they want to take it to the next level. How can we help? Kind of a situation. So that's really, in a nutshell, what we're looking for.
We often even say in venture as well that founders are the most passionate about their companies. As you put it, it's their baby. This is what they deeply care about. But I'm curious, what have you seen with other non-founder led companies, and why you think it really does take, why you think that founders are so much more passionate about what they're doing and why they're more successful at scaling their companies, especially since founders may not have the skills and experience building up a much larger company. If this is something they started, they may not have reached the levels that you want to get them to before.
Yeah, I mean, one of the biggest pieces about running a successful business is just knowing the details of that business. And a lot of times, if you have a manager or some C-suite type executive who gets brought in after the fact, their learning curve is just too high for them to really be successful in that role. Someone who has grown with the business since day one, they know all of the ins and outs of that business. That's a pretty tough amount of knowledge to overcome and to do better than. So that's really something that sets the founder owner apart in our minds. We've worked with a lot of CEOs who have come into companies. I'm not saying that they don't do a great job. A lot of the times they do. But they tend to be more of a managerial mindset, right? They'll take over something that is already operating and spitting out cash and doing a good job, and they'll make improvements and take it to the next level a lot of times. But that entrepreneurial spirit, right, of getting something up off the ground, starting something from scratch, that's a pretty unique gene in my mind, and that is a skill set that is in short supply. And so finding those types of entrepreneurs who have started a company from scratch and then developed the skill sets, right, that they'll figure it out along the way, building some of the skill sets that you talk about, right, of managing a larger company. Someone who can do that, that's who we really like to find and partner with.
So that all makes perfect sense to me. But of course, you want to find people who are the right cultural fits, who are going to work with you, and that you're able to support in the right ways. How do you really look for that? Or what are some signals from founder CEOs that suggest to you that they're going to be a really good partner with you, or vice versa?
Yeah, one of the very first things we do after we buy a new company is have a strategy session. And that is an all-day event where we're sitting down with the CEO and management team and really laying out, where do we want to be in 10 years, 3 years, a year from now, and what key and core tenets of the company are we going to hold to? What core values are we going to, etch in stone and make sure it's on every, corner of the office to make sure that everyone's adhering to? What are our core values and what sets us apart? And so being aligned on those core values is super important to us. We have a set of core values that we kind of like to see, but we usually put it in management's court to see what they come up with. And that's, a really key part in our mind of getting alignment just from a values and culture perspective. And then from there, everything kind of flows from there, right? If you're aligned on, being honest and open with communication, for instance, running the business on a day-to-day basis just gets a lot easier. And if you're making hiring and firing decisions based on those kind of core, points that you're getting aligned on, that just helps in your partnership for the life of the investment. So that's kind of a cornerstone that we really like to start with.
Now, I also know that in the vetting process, you take integrity very seriously. That's a part of the diligence that you do, and really looking at a few different factors in order to evaluate that from founders. I'm wondering if you can share a little bit about that with the audience right now.
Yep. Yeah. I mean, that integrity piece is huge. And we make it a point for sure to meet all of our companies that we're thinking about partnering up with in person, face to face. Post COVID, it can be very easy to do an entire deal all virtually. And we try and stay away from that. I think there's just something so important about meeting someone in person, and really getting aligned culturally and from an integrity perspective that you really cannot just do over Zoom. So that's a really key piece for us. There are some protections and stuff that we'll put in place as well for the integrity piece and making sure that our downside's protected and all that good stuff. But it really starts with on the front end, meeting people face to face, learning what we can about their culture, how they run their business, where their values lie. That all those pieces are super important to us.
And so often it seems like founders or people in general just don't want to share bad news. They don't want to share the things that aren't going well, mistakes that have been made, or even external factors that are holding things back, because it suggests that they're weak or that they've done something wrong, instead of being a way of recognizing the reality of the situation that they're in and coming up with solutions to press forward.
Yeah, absolutely. I mean, that is a human problem, right? Not just a problem in business. That was famously the issue with the Soviet Union, is everyone is just reporting good news up and up and up. So yeah, making sure that honest and open communication, that's why that was the example I used of one of those core values that we really love to see at the top of the list, because that tendency to cover up or look past bad news and let it fester, that can kill an investment, right? If you're not open and frank about even just potentially bad news, the company can go off the rails pretty quickly. So we, definitely practice open and honest communication frequently. We're on the phone, with our owners and CEOs, multiple times every week, which I'd say is somewhat unique in the PE space. A lot of times you'll have like a quarterly board meeting, and it can be tough to jam pack everything that's happened in a quarter into a single meeting. And so what we'll do is we'll just meet, much more frequently than that, and make sure that we're getting to the bottom of every little thing that might be going wrong. And that, can sound kind of overbearing, but our firm is also structured a little bit differently in that about half the firm is has kind of an entrepreneurial or operating background. So not, a traditional finance background like I have. That I'd say about half the firm is more entrepreneurial. And that really helps to come into these companies. And we really love to roll up our sleeves and help out with operations wherever we can. I mean, we've had team members step into C-suite level roles before if needed. And so anything that is happening at the company that we can help out with, we're happy to do that. We have. And so that level of, I think, experience lends itself to a certain amount of trust with these operators and entrepreneurs. We're not just, a bunch of finance guys coming in trying to tell them how to run the business. Most of us have some type of operating background. And so that definitely helps with the two-way communication as well.
It absolutely does. And your comment about the Soviet Union, I think, is incredibly on point, because one of the great things about the capitalist system is that it reveals information much more forcefully and more clearly than other systems out there. The whole process of doing diligence and working with companies is about uncovering information, what's going well to double down on, what's not going well, what kind of pivots should be made. It's about gathering as much information as possible to figure out how to create more value for people.
Absolutely. That's why it's important to have a good, controller in place. If your accounting numbers can't be trusted, it's tough to make decisions.
That's absolutely right. I'm also curious, as you go through the process of starting to work with companies, then once you've invested in them, what are some of the things that you really lean into, that you find is most helpful for companies that are looking to scale?
Yeah, definitely. So we have developed a system called LP Business Systems. It's kind of loosely based on EOS. I'm not sure if you're familiar with this, the Entrepreneurial Operating System. So it's basically a framework for running a business, essentially, is the easiest way to describe it. And I would say that our LP Business Systems is probably about 50, 60% EOS. We really like that system, but we've also added to it a bunch of other learnings and tips and tricks and frameworks and heuristics that we've learned over the years and through our collective experience. And so we have this package basically that is pretty plug and play with different businesses. And what we'll do as part of that strategy session I mentioned is we'll come in day one, unveil this business system that we have, and essentially use most of the day to tailor it to this new investment. And so what we'll have, hopefully at the end of the day, if not, by, within 90 days or so, we'll have a system tailored to the new company that we've purchased. And then they will start to run with that operating system, over the life of the investment. And so it ends up being pretty bespoke, and it takes a lot of buy-in from the management team to make sure that it percolates throughout the entire organization. But we've had a ton of success with it. And I think it's something that really, I guess you could say, kind of gamifies what it means to run a business in a way that just makes it, a lot clearer what direction we're heading and how do we get there. It maps out, a process for improvement and revenue growth and, margin optimization that a lot of times, founders and owners that we're working with have not totally thought through it before. If they have, it's only been on one area and not another. And so it's kind of a comprehensive playbook, if you will, for growth and success. And so we've had a lot of success in rolling this out and getting a lot of buy-in for this.
Just amazing, Travis. Now, from the other side, you've had a lot of successes here, but everyone has their own challenges and that we all learn from here. And over the course of your career, I'm wondering, what are some of the biggest lessons you've taken away from investing, whether it's from challenges that you faced or some of the biggest successes that you've been doubling down on?
Man, there's a lot, where to begin. I would say one of the biggest lessons that I've walked away with is, the management team is kind of where it all begins. And if you're not on the same page with your management team, it's really tough to have an investment go well. Just, talking about your own, or going back to the Soviet Union comment, right? Like that was exactly what went wrong there, right? You couldn't trust anyone, and the lack of trust didn't allow for efficient information sharing. And, at the end of the day, nobody knew what was going on and how bad, the rot had spread. And so a company, you really have to trust your management team. And if you don't, that information is not going to flow to the top. And, whenever you're giving advice or recommendations for how to change the business, they may not be flowing down to the rest of the company either. So that, communication back and forth there is super, super important. And it starts with the trust with the management team. We have had several instances where the management team ultimately, could not be relied upon, didn't work out for whatever reason. Like I said, we had one team member at one point have to step into a management role. That was because the prior CEO was not working out. So we see that frequently. People are not perfect, and everyone likes to, spend their work in the best light possible. And so making sure that you've got that honest communication is super, super important. We had one instance where a former owner of the company that we bought ended up just going down the street. He was under a non-compete agreement, opened up the exact same type of company, went back to the company that we had just bought, stole the equipment, moved it down the street, and opened up shop and started competing. And so that's an example of a manager that we did not get along well with, and there were legal repercussions, and we figured it all out and it was fine. And that's a pretty drastic, extreme case. We bought over 50 businesses. That's only ever happened once. But, it's just a good example of, you really have to be able to trust and get along well with your management team, make sure that they're not going to go down the road and open up shop against you. And if you don't have that in place, then everything else can kind of fall apart.
Well, Travis, this has been incredibly insightful and useful for the community. I really appreciate you sharing all of your experiences and insights. Before we go, is there anything that we haven't covered that you would want to share with the Liberty Ventures Network?
I don't think so. I'm always open to connect with others. We're pretty much always looking to connect with other investors. Like I was saying earlier, the independent sponsor space is pretty new. And so we've kind of made it a point to try and reach out to and connect with other independent sponsors. There's somewhere in the range of 500 to 1,000 now, but that's been growing, super quickly over the last, 5 or 10 years. So we're always interested in talking with others who are doing similar things and sharing notes. Same thing with business owners. Obviously, also, we're always looking for new business owners and entrepreneurs who might be looking to connect, as well as investors. So any type of institutional, money manager or anything like that, or even retail. So we're always an open door. I would say that, our founder, Thomas, he's not come from a traditional private equity background. And so kind of a core part of our DNA has been democratizing private equity in a certain way and extending a hand and building bridges to others who may not have had a traditional private equity background but are looking to get into alternative investments. And so we're always open to those types of conversations and are happy to connect. So I think that's probably what I'd leave you with. Is that my email and LinkedIn are always open.
We're happy to share that with anyone who wants to connect with Travis, but really, thanks for democratizing private equity. Thanks for everything that you're doing in advancing a free and prosperous future through business, and for sharing all of your insights with the network today.
Absolutely. Alexander, it's been great. Thanks for taking the time.